All right, chapter 2, blockchain and cryptocurrencies. Let's start with a brief recap. So, if everything went as planned, you've had a lecture on blockchain and crypto a little bit. And I would encourage you very, very much to try to understand how blockchain really works. But a short recap and two things that are, or multiple things that are like important to understand, is that blockchain enabled us to transact in a different way. So a blockchain is a ledger, it's a ledger technology. It allows us to transact among each other without parties in between. It is in that sense a bit more accessible, a bit more transparent, and it allows us to program that which we actually send and the way we actually send it via, for example, smart contracts. So a smart contract recap. A smart contract, it says basically if this then that, like computer programming language, and it can, for example, the like it's an ancient example that I always like to give. But for example, if you have an Airbnb with an automatic lock, right? You have a house somewhere, and that Airbnb door has its own wallet address, and you have your wallet address with your phone. You can, for example, program it in such a way that if you hold your phone to the door and cryptocurrency goes from your phone to the wallet address of the door, only then, so if this, then that, then the door will open, right? Now, such a protocol could, for example, be more transparent and more community owned or decentralized is the term, I guess, that we're looking for, than, for example, an Airbnb. And remember at the beginning, I mentioned this, upgrade in efficiency. And this is, in a lot of cases, what blockchain could provide. It is still, even after all these years, in its infancy when it comes to actual usage, I would say. A lot has happened, a lot of hype, a lot of up, a lot of down, a lot of pain, a lot of joy. But the technology in and of itself is really quite something. It allows us to transact with each other in a way more transparent and accessible way. And it cuts out unnecessarily or perhaps even greedy middle participants that have a monopoly on transactions that maybe could be more efficient, and that would be more beneficial to everybody. Like another example of a colleague of mine at the university was from Cameroon. Families, he works for the university, he lives in the Netherlands, but his family lives in Cameroon, and he needed to send them money. If you do that with the traditional services, it will cost you anywhere between 3 to 10%. But with Bitcoin, it costs like 10, 20 cents. And we're talking about, if you send 5 or 10,000 euros, that stuff really adds up. And even just that is already like an excellent use case for example, Bitcoin. We need to understand a little bit how, like the nature of blockchain, so the decentralization factor that takes place. But we also need to understand the smart contracting concept, because it allows for protocols to run by themselves. This was one of the messages at the beginning of blockchain where they said like unstoppable dApps, right? Where an app is launched on a blockchain, it works with smart contracts, nobody is really in charge, or the community is in charge via voting mechanisms. Or the protocol just runs entirely on its own. And the data that is provided, so the way that it operates, is predetermined by the programmers or the team members, etc., and is basically visible for everybody. So it's really, really a fair way of seeing what the code does, how a protocol runs, what it does, what happens if you interact with it in this way, what happens if you interact with that way, etc. Now, again, still infancy, but when a technology is in its infancy, that's where the opportunity lies. It's really that simple. The earlier you are, the more risk, right? We need to find a way that we can tolerate risk. So by, for example, not investing as much money. But I always hear these arguments against crypto, and I don't even like the term crypto anymore. But I always heard these arguments against by the masses. And I just noticed that the people that keep paying attention are the ones that are going to benefit from that in the long run. And then, of course, the outsiders were like, well, you got lucky. That's what generally happens. But if you just really pay close attention, if you understand the technology, there is stuff being built that is really going to change a thing or two in the way we interact and transact with each other online. Okay, that's enough ranting for at least the intro. So what we need to understand is that we have a similar but also different way of evaluating a blockchain or a cryptocurrency. The sources will guide you through it more and more. Quantitative and qualitative doesn't really change that much. It's just the nature of the data that we are working with changes a little bit. And we need to get into our heads that we are working with protocols often instead of organizations. So hopefully I'm not diving too deep, but and again, market cap, as I mentioned in previous video, is a metric. The financial ratios here are just different. We can still look at the team and the founders. I'm still a huge beneficiary of that. Like, I highly recommended to look at that. I've invested in a lot of crypto projects, like probably, I don't know, anywhere between like 30 and 50. And I've always come to find that when at the beginning I noticed the communication from the team members or the founders was just a little bit like arrogant or not transparent, or I've always had this idea of like, maybe I shouldn't, do this. And I've, like, without exception, I regretted to, ultimately put money in there. And there've only been like a very tiny handful of projects where I was like, yes, I go all in, and I can see them, at least working in the next foreseeable future to realize the vision that they have. Protocol usage is important. So there are a lot of blockchains out there. Not all of them are used. And I did an early stage round once in a blockchain protocol, and I exited based on a metric that I saw that every block in the blockchain, normally a block has hopefully a lot of transactions, but all the blocks were literally empty. And that caused me to sell. And right now the asset is like 80% down from where I sold. So that helps you to, again, to make these decisions where you don't believe in the dreams that a project sells you, but you actually look at what is happening, like following the money. Total value locked. So that may be a little bit too advanced for now, but when we have a protocol, like, for example, a decentralized exchange, which we'll talk about more, for example, like, let me use that example. Like when there is liquidity provided to a protocol, that could be a DEX or a decentralized exchange, it could be something else. We use the metric like, okay, how much money is locked in the actual protocol? This also happens with lending and borrowing protocols. Again, I will probably, we'll spend some more time in the lecture talking about this stuff to really get it into your heads. But those are just metrics. So it's all related to usage, like how much money is flowing through that protocol, like, how popular is the protocol ultimately. So before we go to perspectives, as usual, let's go to some browser stuff. So to cover the sources, you know the drill by now. Again, I'm going to keep this short. So there are several websites and videos that we've selected just to get you familiar with how to look at this stuff. But it is paramount that you understand the basics of blockchain. You don't need to know how the whole in and outs work, but just understand the implications of decentralization, for example, like what that enables and how it allows us to come up with different business models. Different like models that are not necessarily centralized somewhere, but can be way more decentralized and operated by communities or operate on their own. Okay, crucial aspect, because blockchains come with tokens, generally speaking, we need to understand the metrics when it comes to that token. So with stocks, you have shares, outstanding shares, non-outstanding shares, or whatever the shares may be going. With tokens, you have, for example, circulating supply and total supply, right? This gives you a different market cap, and already an important metric there is like if a protocol has 100 million tokens and 99 million are still in the founders' pockets, 1 million are distributed to the community. Well, then there are still a lot of tokens that are going to be sold by the founders, which could have a negative effect on the tokens that you hold, right? This is something we call inflation as well. So that already is an important metric. You need to understand what the tokenomics look like, what the token does, how it accrues value, etc. Right? So these videos will take you through that. The way of doing analysis, so again, FA related, quantitative, qualitative. When we look at quantitative, I would say like that's mostly related to on-chain analysis. And here I can send you down a rabbit hole, and I will not see you for the next 6 months, but I will not do that. But on-chain analysis is again a study on its own. But it's very cool to see metrics on, for example, active wallet addresses on a blockchain, or new addresses created, or how active are old addresses, right? And for example, Bitcoin has the most history, the Bitcoin blockchain, to see where, you can see where the Bitcoin coins went. and it's really fascinating to do research into that as well. And it can definitely, give you, as it's promoted here in this video, edge. Now we do get to more, like meme types of analysis maybe when we venture into the world of crypto. Again, when we talk about crypto, please just take it from me. Look at the technology, look at the implications, try to understand where it is an increase in efficiency in relation to how we used to do things in the past, and form your own image. Forget about what you hear in the media, forget about all the hype stuff, dive in and find out for yourself, because then you will actually be able to capitalize on the potential, growth that is still to come. And you're not going to do that by, in 2 years' time, buying something again because you've heard of it or it's just the latest hype stuff. That's probably when the smarter people are unloading their bags. Okay. So yeah, is it being taken seriously? Well, yes, definitely. Back in the day, we had a gold ETF that was being launched. Right now, as we're recording this, Bitcoin is probably is going to get an ETF approved by some of the largest institutions that requested this. So, for example, BlackRock. That's a huge deal. It is an industry that is not going to go away anymore, and I think Bitcoin will have its fair share of value within the future monetary system, right? But that is a personal perspective, maybe. If you want to know about that, let's talk in person at the drinks or one of the times we meet each other. So yeah, it's definitely being taken serious, and there are more and more applications being done with blockchain. And I do think that if everything works smoothly, efficiently, and battle tested, that blockchain could be a backbone for at least part of the global financial industry. And if you then take the characteristics of more transparent, more accessible, more reliable, etc., then you have this, again, I repeat myself, increase in efficiency, right? So that's a potentiality for this technology. So this goes into a little bit deeper, your entire crypto valuation framework, right? Just read through it, take your time. If you have any questions, come and find me or come find one of the assistants or Hans. Hans also knows a ton about this, especially about the tokenomics, and we have plenty of opportunity to answer your questions. Advanced source. One of my favorite people in this entire space is Arthur Hayes. Why? Because he's extremely intelligent and he operates like a shark. He thinks like somebody who is, really experienced in this game, ex-big trader as well. He had his own, he and others started BitMEX, which was one of the first successful cryptocurrency trading exchanges. They innovated products there as well. Extremely smart guy. And he has his views. You can agree with that or disagree with that. But this article just gives you a little bit of an idea of like, what does somebody who is really at the forefront in this space, at least, what does he think like? What does he think about, right? I'm not going to repeat that again. But it is advanced, so perhaps you need to know a little bit more about the happenings within cryptocurrency space to understand everything that he's talking about. But if you can still read this and see, like some of the conclusions that are being drawn here. If you don't read the entire source, read this part on Dog Money, and just about how how we sort of like look at value as people, and what sort of like the implications of something like Dog Money or Dogecoin is in relation to the traditional financial fiat system. Just read it for yourself. It's amazing, and it allows you, it helps you to think in a way hopefully you haven't thought before. At least that happened to me. That happens to me when I read his articles. Huge following on Twitter, very respected person, not without controversy, but hey, what to do. We take what is valuable to us and we implement it in our strategies. Right, some perspective to close off. Yeah, I mean, the same thing applies in blockchain and crypto as far as I'm concerned. Just try to filter out the noise, all the stuff that you hear about it in the news. The news is generally the latest to report on anything, especially technological advancements. You just want to get as close to the fire as you can. So network is also a very important thing here. Like a lot of the sort of success, I can say that I've had has been thanks to knowing people that knew other people or who provided an entrance into like an early stage project. And you just it's really important to get close to those fires. Find people around you that have been doing this for a while, and see if you can piggyback on them. I know that everybody's like humans generally are happy to help others, as long as somebody, I guess, is sincere and really wants to go. Hans was one of those examples for when he jumped up after Jordi and my lecture at the 2017. This was. He was in the back of the classroom, 100 students, and he literally, when we finished, he like rugbyed himself towards the front of the stage, and I was asking question after question after question, and it was just fantastic to see his enthusiasm, and it's really awesome to have sort of like at least played a little part in helping him in his journey, for example, right? So just for speaking from experience, that people love to help people. That's at least my experience. Yeah, I think that's it. Just keep in mind, technological advancements, they don't come without their their defects at the beginning, and that's where the opportunity lies. When something is not working yet, and especially when it's a space as big as this, that's when people haven't seen the opportunity yet, and that's when you're early. You're early when stuff still isn't working very properly, right? And all the noise that crypto has seen has the temptation to, or not the temptation, but it could have the effect that you are led away from the space, and you just like drop it and see it as crypto goes up and down. I've heard a lot of people, and I don't know, whatever coins people bought. Just try to look at the fundamentals, right? I think that is absolutely crucial, and you will find very interesting stuff that is still being built. And how this goes with AI, traditional finance, the DeFi, all that stuff. Who knows where it is going to go? But that there are opportunities out there, that is 100% certain. So more in the lecture, as I said, more maybe even extra lectures, or I'll come back to this at a later video. For now, I think this is okay. Good luck with the sources, and I think the next one up is sentiment analysis. And best of luck and enjoy.